Hi, my name is Nancy Matthews, and my project is on mortgage financing. Currently, I own a bank-owned home. I bought this home a couple years ago, and I've never bought a bank-owned home before, so I was a little hesitant, but it was definitely in a neighborhood that I wanted to be in. When I did purchase it, I went through Fannie Mae, which was a little new for me, which is basically a conventional loan. In this type of conventional loan, I did have to have close to 20% down, but since I sold my previous home, I was able to do that and get a really good interest rate. I'm going to focus on these types of mortgages today: conventional loans, FHA loans, VA loans, adjustable loans, and 203K rehab loans. These are some of the most common. There's a few others out there, but these are probably the most common loans available to us today. Conventional loans are the most common loans that we can get. Conventional loans are great because you can get a really good rate. The only difficult part is that you are required to probably put at least 10% down on it. Another thing that's important is that you have to have good credit to qualify. Also, you can get those loans in a 15 or 30-year loan. So conventional loans are really good for those that can qualify for them. FHA loans are pretty common for first-time home buyers, but pretty much anybody can purchase an FHA loan. FHA loans are, you can have less money to put down, so a down payment would maybe only be 3.5%, as low as at least your credit score might not be quite as high, you could still qualify. Your interest rates might be slightly higher, but not necessarily. They are easier to qualify. The only other thing is that you would probably need to carry mortgage insurance, which allows the lender to be insured in case the borrower can't pay the mortgage. VA loans are fairly common for veterans, so you must be a veteran to get a VA loan, and there's loans that you can get with the zero down payments. We can't all get those kind of loans. There's also the adjustable rate mortgages. Adjustable rates aren't as common, I think, now as they were a few number of years ago, but you basically start with a lower rate than the current rate. But every few years it rises, and eventually it's higher than your current rate, and that's not necessarily probably a very good idea either, because you will have probably eventually have a payment that you can't afford. So I wouldn't suggest an adjustable rate mortgage. Okay, on your FHA 203K rehab loans, those are really good loans if you are purchase a home that needs to be fixed up. It's a fixer-upper, like you've seen on some of the HGTV shows. This allows you to actually borrow more than the amount of the purchase of the home. So pretty much the same things are required. You still have to qualify for the loan. You still have to have a decent credit score. The other things that are important is that you open up a repair escrow account. That you need to do, and also the repairs need to be done within 30 days of closing, and the work must be completed within 6 months. In conclusion, I have experienced purchasing different homes, but one of the most important things for me when I buy a home is to make sure I can afford it. Don't purchase something that you can't afford. Another thing I think is really important is to keep a good credit score. So if you want to get a loan, from day one when you start paying your own bills, to pay them on time, and so your credit score will be good. So that when it comes time to purchase a home, you can get pre-approved and you have a good um, credit score, so you can obtain a loan. And maybe the first home you get won't be the most perfect home, but you'll have opportunities to save and to make those improvements um, when you have the funds to do that.